I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused.
So you could all attest to the fact that at some point in the year or even last year, we're mainly doing near cash, exploring many near cash opportunities, and to put it, repos. But as it stands now, we have begun balancing safety with meeting investor expectations by improving the yield on the portfolio. So I would say largely we are focused on near cash securities, i.e. repos, as well as having some exposure to the very short end of the government treasury bills to give us some exposure to improving the yield on the portfolio. So gradually we are beginning to find ways and the best means with the reasonable risk for which we can give investors some good returns, in spite of the fact that we are making safety the principal driver of our investments. So largely near cash repos and then some treasury bills are the main drivers at the moment.
Okay, great. Thank you for that. So with safety as the key consideration when you are making your investment decisions for the fund, how would you describe the fund's performance so far? Maybe for this, I'll share the fact sheet so that our investors can see what the fund has done so far. All right. So again, how would you evaluate or describe the fund's performance based on the fact that our key consideration has been safety?
Well, I think largely our fund performance is in line with the sort of strategy that we currently hold. I know when you probably look at where treasury rates are quite high in relation to our fund performance. Largely, I will say that our fund performance actually reflects our safety position as well as improving returns. So currently, we are doing, for the past 30 days, we are doing about 20%. That clearly indicates how we have shifted from a pure safety point where we're doing just below 20, around the teens, to 20%. So fairly, our fund performance, I think it's giving investors the level of expectation that they want to see. And I think given the fact that we always want to balance whatever strategy we have with the expectation of investors, I think it's a performance that clients should be comfortable with, and it's more reflective also of our strategy of safety, given the key investment vehicles that are driving this performance. So largely, two things. This is a performance that is reflective of our strategy, and also that we believe largely meets investors' expectation. Given the fact that we are in a period of debt exchange program, there's not too much clarity, but things a bit, and investors are becoming a little bit more concerned, having a little bit of improvement in terms of their returns. So for we to be able to pivot from the teens, somewhere 15% to about 20% levels, I think it's fairly reflective of what our clients expect. Thanks.
Okay, great. Thank you. So perhaps we can look at the future. So we've talked a lot about how we've done so far at this point. What are your impressions or what's your outlook for the rest of the second quarter? I know we don't like to look out too far because we're in very interesting times. So at least let's look out to the rest of this quarter. And then if you can dip your toe in the waters of, Q3 and beyond, would be grateful for any insights you have.
Okay, so largely I'll say for this quarter into the coming quarter, we do not expect any major shifts, largely on the macro side. The only key thing that I believe everyone is looking up to is the IMF program. However, when we look at issues with respect to inflation and the stability of the currency, that only comes to support the current state of the market where we have some stability. I think probably when we look at the issue on inflation, we'll probably continue to see some stability around it, given the fact that there have been some introduction of the of trade taxes that could feed a little bit into trying to push the inflation on the upside. But when we look at the base effect, that could come true, but I mean, we wouldn't expect any significant shifts in terms of how inflation will do. On currency, I think it will continue to remain quite stable, given the fact that governments have been given a huge relief of it not servicing its euro bonds, which is one of the huge demand for hard currency for the country. So largely, I think until we see the IMF program come through, shouldn't expect any significant shifts in terms of our macro and our markets. And then once the IMF programs comes through, I'm sure we'll quickly begin to see some level of improvement in terms of activity on the market, some level of shifts across the yield curve and other opportunities that people want to capitalize on, given the fact that there's going to be some more sanity in the system, and then things are probably going to bounce back and get better.
Okay, so I guess the sentiment I hear from you is we don't expect things to shift too significantly for the rest of the quarter. However, if the IMF deal came through, then we might have some hope of seeing some more significant improvement. Okay. All right, excellent. So assuming, I know you're, essentially the expectation is that we'll continue, managing what we have, as we say. But in the case turbulent times hit the economy, what can we expect to see with a fund?
Pretty much one question. So I think in recent times, we've been through different phases of some of these tough issues, market cycles, and some of these turbulent issues. Largely, I mean, we cannot attest to the fact that ICLF, the management of ICLF has been quite strategic, swift, and very evolving in terms of how the fund is managed. So with respect to turbulence, as and when it may hit the fund, I think we have picked some good lessons from what has happened recently and other happenings in the past. And I think as managers of the fund, there are a lot of clues that we pick before certain events actually crystallizes. And I think one thing we did in recent times was how we swiftly moved from positioning in securities, maybe treasuryable or bond, quickly into near cash, mainly because our indicators in-house were pointing to the fact that something could happen that could hit the portfolio. So with all these lessons learned, I can say that provided our timing continue to be on the right side. Probably what I would say is that, I mean, should such a thing happen, we'll probably have all our investments in cash, where investors can safely access it when they want to. Because where you see a turbulence coming, there's no need to rush to invest people's money. Where it gets locked up, or, I mean, it's no more accessible, right?
Okay, sorry. I may have lost a bit of what you said at the end, but I think what I captured was that we have a proactive risk management style. And so we try to see what's coming and then move the investing strategy in accordance to that. Is that right?
Yes.
Okay, great. And so we would be looking at staying on the liquid side, because outside of safety, our next key focus is liquidity. It's in the name of the fund, so we can't miss that. And so should anything unforeseen happen, we'll be moving to more liquid assets so that customers or investors can have access to their cash as and when they want it. Okay, that's excellent. All right. So why should one continue to invest in times like this? And that's a question that we get quite often from our investors or potential investors as well. So I'd be grateful if, from the professional point of view, you can please take us through a good answer to that one.
Okay, so just to come again on the issue of when we found ourselves in a turbulent time, is that correct?
No, my question was now, why should why should an investor continue to invest in these times? Because it's a question that a lot of potential investors, current investors have, and it would be good to get a professional's view on that answer.
Okay, so why do you have to continue to invest in ICLF in these times? Very well. Cash in and of itself, I mean, value of cash, so provided there is inflation, I mean, the purchasing power will definitely go down. And sometimes you invest not necessarily to generate income, but to protect your cash, which I believe is quite reasonable and fair. Sorry, which I believe is quite reasonable and fair. But then I think everyone at every point in time has some goals that he or she would want to achieve. And on the back of that, you probably would want to embark on a project. And then maybe you decide that, okay, you have this X amount. You go to the market tomorrow, the price may have moved. So having your funds that you probably have set aside for a project in a scheme like this or in a fund like this gives you that level of protection in terms of inflation. As we speak now, inflation is quite high. But I think for you to be negative 30 is better than, it's going to be negative 20 is better than being negative 30. I'm just speaking in terms of real return. For you to be down in terms of how much you would have used to buy a bag of cement, and then probably in the next couple of months, instead of probably you using 50 cedis today, probably using 60 cedis tomorrow. Assume you have your funds in an investment, you probably may have 55 cedis to use. You may just have to stop that with 5 cedis. So this is just to give a practical example. So in these times, yes, there are some hard lessons that have been learned, but for you to find yourself in a fund like IC Liquidity Fund, given the history of the fund and given how we have managed the fund in recent times, where we have made safety our key focus, make sure that worst case, we have all your investments liquidated in cash so that where you have to access, you can easily access it. I think it makes a good point for you to not keep your cash under your bed or just in a bank account, but then access a fund like this, put it in, trust that safety is indeed made a priority, and then with some level of reasonable interest or income generating on your money to give you that sort of edge against inflation and other factors. So yes, I understand the landscape is quite fragile, but then that should not put people on the side. But I think we all need to get involved in one way or the other, because come what may, if you keep your cash, you may still lose some value. Thank you.
Thank you so much for that, Obed. So I think the gist of what you said is we have to prioritize maintaining the value of our cash. Yes, we understand that inflation is high. The fund is definitely not, able to meet a 40 or 50% inflation level. However, it's better than holding cash, and it's better than holding cash, say, at 10% at best in your bank. So in terms of our clients' investing strategies, it's a great way to consider your, holding your cash position so that it's at least doing something to maintain its value. So thank you so much, Obed. I think we can move to the Q&A section if there's any questions. I saw hands go up, but I think they've come down. So to anybody on the call who has questions, we have a few minutes where we can take some. Okay, great. So I'll start with Jerome, please. So Jerome, you can go ahead. Please unmute yourself and then ask your question.
Hello, Dora.
Hi, Jerome. Good afternoon.
Good afternoon. Yes, I have a quick question. I came across a statement purportedly from the Ministry of Finance and individual bondholders, talking about some bonds that were to be converted to treasury bills. And I want to know whether this will have any effect on the current yields of treasury bills, or whether it will increase the risk level of treasury bills. Thank you.
Thank you. So Obed, I'm sure you're also aware of the statement Jerome is referring to. Is there any light you can shed on that?
Okay, so when we look at the current landscape with respect to treasury bills, I think investors, if you look at the level of issuance and the success rate, it's clearly points to the fact that investors are quite comfortable playing within that space. I think it's been pretty much effective compared to other government-related securities, and given the position of government on treasury bills. And now, one key thing that affects when it comes to the rate side on the issue of demand and supply, for bonds to be converted to treasury bills, it's essentially clear that in terms of size of issuances may have to balloon. But the big question is that what size of these bonds is going to be converted into treasury bills for the level of exposure to treasury bills to balloon or to hit. If it's so, is a level or in terms of what size. So if the size is not something that would throw the issuance sizes overboard, that will scare people. I mean, government has its own way of handling some of these things. Even without communicating, government can convert anything to treasury bill for anyone. So I don't think that should be, it should be a concern depending on the size. Assuming we wake up and say government have converted about 30 billion into treasury bills. It's a big thing that you want to pay attention to. So yeah, these are things that happen, but given the fact that something that is so huge out there, I don't think that should create much of a big panic. I think what we probably be paying attention to how the demand and supply on the current issuances are going, what the success of the issuances are going, because we begin to see that treasury bill issuance are not doing that great, then it gives an indication that government may be in a tight position in terms of its short-term liquidity. So these are the kind of things that we probably may have to wrap our heads around and then be reflecting on. So some of these things that you have mentioned, I mean, can happen, but I think the points I've made are the area that we need to keep our focus on.
All right, great. That was a great technical, I guess, introduction to our Q&A section. So I have Kelvin Chrisman next, please. Mr. Chrisman, if you can kindly ask your question. You'd have to unmute yourself and then you can ask, please. Okay, Mr. Chrisman, if you can hear us and you're having any technical issues, you can also type your question in the chat. Oh, there you go. Yes, we can hear you.
Good afternoon.
Good afternoon.
I wanted to ask how the foreign reserves, which is being used to hold back the FDI against the dollars, I wanted to know, because I came across the news that the foreign reserves are nearly depleted, and that will cause significant change in the exchange rate. So I wanted to know if that one too can affect the exchange rate, and if that one too can affect we the investors. I wanted to know how it can affect us. Thank you very much.
Thank you, sir. So Obed, over to you. How are our foreign reserves doing, and how does that affect eventually our fund?
Okay, very well. So
the exchange rates and then our fund.
Great. So as we speak now, I think we've had other sources citing the fact that our current reserves are at much more critical levels. Compare that to what the Bank of Ghana also posts out, just about 2 months of imports cover. Very well. So issues like this are critical, as you have said, and like we have indicated, I mean, you cannot show your chest out boldly to speak in terms of current happenings, because anything can happen anytime. And that's why I did mention that the big game changer here is the IMF program. But then when we look at the issue of our reserves and then the exchange rate performance, yes, if we get to the point where we can no more supply dollars, we can definitely attest to the fact that the level of stability we are seeing in our markets will shoot up. We'll actually decline, and we will see exchange rates balloon. I mean, you'll probably be seeing levels that we have never seen before. So these are all realities. I wouldn't say we should count this out of the current reality that we may find ourselves. Yes, it could be possible if we are not able to get on the IMF program as soon as possible. I believe that is why the government is pushing quite hard to make sure that they actually secure the program the soonest, just to make sure that we do not, get to very critical levels in terms of our reserve positions. So yes, when we look at our current reserve position, it's not much to be, to boast of or to be happy about. So I wouldn't take out whatever you might have read or what you might have seen. All that indicates is that, yes, we are still in times. Like I said, we are not out of the woods yet. So some of these things are realities. And that is why we, as managers of this fund, are still making sure that safety is a key principle in terms of all that we are doing. Because we could all wake up the next morning and then we could, hey, yes, may not be within our expectations. So yes, but then what is critical to us is in terms of what I've said is, and back to how we're managing this fund, is to make sure that what do we call it? Safety is a key thing and the principal thing to us.
Excellent. Safety and liquidity. Great. So I'll move on to Mr. or Ms. Cranting Broom, Nana Cranting Broom. Your hand is up, please. Kindly unmute yourself and then ask your question.
Hi, Obed. Hi, guys. So I think I have been taking some notes, and I think one of the critical things that currently the fund is very much concerned with what Obed has been reiterating would have to do with the IMF situation. I'm not sure if he's given us clarity with regards to that risk event and what specific issues we should be considering there. But I think in his last statement, he's just hammered on it again about the fact that the government needs to be able to get onto that program. Now, in the event that that doesn't happen, what are some of the, how's the fund basically positioned to handle the risk events that comes from that?
Okay. So I can go, right?
Absolutely, all yours.
Right, okay, right. Very well. So in such economic events, I think it's quite critical that we understand that governments will support, and that will boil down to some of our key macro indicators. It will quickly drive or find its way into markets and various investment vehicles. And then as I speak, I don't think any investment vehicle will be left out. So this is a critical if you should have such a thing to avoid we not get on the IMF program. That is really great. That's very, very critical for all of us. And I think that is why I keep mentioning that we are reading the indicators, we are picking the clues on daily basis. I think ICLF is one of the funds that you see we have a lot of meetings on it because of its liquidity nature or because of how the fund is sold. I think there's a lot of meetings that I can even say much more on daily basis. Just try to assess what is happening and how we can quickly move certain securities quickly and how we can dial back on certain durations that we might have taken and all that. So yes, I understand. So I think what is key to us even is not to wait for us to have an indication that look, the IMF program will not happen, but to give us an indication that it's likely that this will not happen, and then quickly make sure that we either have our cash, all our investments back in cash, or actually maybe repo against a bank that we believe that has some good external exposure that worst case, its parent company will not let it go down. So these are all clues that we pick on daily basis. So we are not looking at every now and then trying to have some government exposure. No, where we now have to follow banks that have foreign exposure and then some level of guarantee or insurance that we believe we can benefit from, we explore it. I mean,
okay. Before I let you go, I just talking about that and considering that, worst case scenario, what percentage of the fund can investors say, worst case scenario, everything hits, forgive my French, but shit hits the fan and then, the fund has to lose some percentage of it. What's the percentage we're looking at?
So we need to put this in perspective so that actually we can understand and this. So maybe I can give a few scenarios just to make sure that I put this in perspective.
Okay.
Because when we talk about something hitting the fund, it depends on what hits the economy. That will determine how the fund will. Exactly. So it's very broad to try to put it to narrow it.
Yeah.
To just
so if I can narrow it down. Okay. So we're looking at an inflationary rate, which is currently officially, I suppose, somewhere around 40%, which is, in my mind, absolutely bonkers. We're seeing more and more expats trooping into the country. Spending isn't being reduced by these individuals because they come in and they already have won over locals, basically. So they are being able to spend more on resources, and that's something that we need to be. The other day I was reading from Trade the fact that we're seeing Malaysia's palm oil production going down. So we're going to probably see in Africa some level of production pickup to be able to support international market, what goes out there, all these factors. And then now we have the IMF situation. So worst case scenario, we saw a couple of months ago how the government basically put some kind of seal on these fund managers. I personally had some funds with, I think, DataBank, and then we saw how we couldn't, as an investor, I couldn't take my full capital out of there, and then even whatever I had gained from there. So if I am to think of the worst thing that could happen to ICLF and to say that, okay, we're going to lose some money, I'll just, as an investor, I'm thinking, what percentage can I imagine in worst case scenario goes away and I could still live with myself? Is that something that is captured within the books to be able to give? Because I wouldn't want to think that everything is rosy and that in any event that I could still have my full investment back. If I'm to lose my investment, what am I looking at? What's the percentage?
Very, very much well in perspective now. So, like I did indicate earlier, this is a mark-to-market portfolio, which means that the fund has actually exposed itself as it's supposed to be.
That's right.
To make sure that as and when investors are seeing the real value of their investments, so that alone gives you a clue. So in a situation where there is any crisis, definitely we should see interest rates as stable as we are seeing it now. We'll probably see it taking an upward trend. And what that means is that it's going to be an event that will negatively affect the value of the fund, because where we have to dispose or exit some of the securities that are not near cash, it may come at a much more maybe expensive way of exit. So this clearly indicates that yes, this is a reality that we are not running away from, because we have already indicated that this is a mark-to-market fund. So I can say that interest rates should go up. So you see now treasury bill rates are around 20%, way up to about 27% on the tenor. In the likelihood of any event, we probably could see rates 30, 40, 50. So that gives an indication that, well, provided we have a bit of this securities in our portfolio, if we should exit at, let's say, a 40%, that's probably could be an indication that given the duration, the sensitivity of the security that we have, we probably could lose maybe a 5% or a 10%, which probably will be better than your funds being locked up. That you cannot.
That sounds a bit rosy, but it's meaningful too. So I'll take it.
I mean, yeah. So that's the sort of perspective I just wanted. And then the reason why probably I'm talking about exit. This is a fund that we try to manage very actively. It's not a buy and hold motive behind this investing process. That's why probably sounding quite rosy to you. But in actual fact, that is the position of I mean, those actually managing the fund, those managing the fund, because we are quite very active on the scheme where we need to sell something quickly, even if you need to take a little loss just to make sure that the investor is protected. You value that, then still hold on to it. And then, yes, anything could happen, that things may turn out differently than what we even expect. That's one, no one can run away from it. But what I'm trying to lay emphasis on is what our position are, what we do, and how we try our best to make sure that we get the best for you. We cannot take the fact out that anything will happen, that, I mean, the worst, I mean, of anything can hit any, even our banks to access our funds at some point. Access, if you're not even access to cash in the bank, cash that you say is key, you cannot even access, it's a risk to you. So I'm only trying to spell out.
Well, that's true. I have to say I'm impressed with the fact that it's an actively managed fund. It is quite impressive that that's being done, because if that's not the case, I suppose then a 5 to 10% would not really be something that I would say is well priced, a risk that's well priced. But since it's an actively managed fund, then I'm sold on it. I'm sold on it for now.
Thank you. I think it was a tough sell, but thanks, Obed, and thank you, Mr. Cranton Groom, for the questions. IC is an active manager. Just to give background to those of you who may not know, IC as a group manages over 7 billion cedis of pension assets. We manage all kinds of asset classes as well, and so we have pretty deep knowledge in the investing space in Ghana, and we've been around for more than 20 years. I know from experience that our investing teams' key mandates is that, look, they're employees too. They want their hard-earned money to be looked after, and so they look after people's pensions like they would look after their own money. And beyond that, they want to be able to go home and sleep well at night. So we are all invested in the fund at IC, if not all, maybe save off maybe 5 people. And so we take this responsibility very seriously. So I think with that, we'll go to Mr. Ibrahim Fawzi Shamir. I think your hand is up as well.
Good afternoon.
Hi, sir. I think your volume is a bit low, so if you can kindly speak up. I heard you say something, but it's a bit low.
Good afternoon.
Excellent. Good afternoon, sir.
Yes, sir. Please, I have I actually joined a bit late, but I want to be educated on these two, between a self-directed portfolio and then the liquidity fund. I have a self-directed portfolio, and right now I want Mr. Obed to convince me on why I should join the liquidity fund instead of the self-directed portfolio. Do you hear my question?
Yeah, it's very clear. Very clear. Yeah. So I think there are a number of reasons. For a fund like this, you have professionals managing the fund. That is one thing. Who always keep their eyes on what you need to keep your eyes on, so that you can free yourself from making sure that, I mean, you are listening to all the news, they are looking at all the necessary things you need to do. So you have all the benefits that a professional would have to do for you, right? So I think this is the key selling point. And then beyond that, I don't know how well you can probably manage your own fund. I don't know what securities you may be investing in, but ICLF gives you some reliable level of liquidity as and when you want to take some of your funds, you can easily access it and take it. As a self-managed fund, I don't know what you are investing in, but there are certain investments that if you want to disinvest, it may take a couple number of days, or even weeks, or even maybe months, just to make sure that you create that assets and then get your cash back. The other bit is assuming you are able to do a treasury bill, and you bought a treasury bill at, let's say, 20%, when you expose yourself to interest rate risk, definitely I see ILF is one way or the other exposed to interest rate risk. But once you have professionals managing it, they try to minimize the effects of this interest rate risk on the portfolio, which you may not even have the time to do that, or you may not probably have the necessary systems in place to do those things, right? So these are a couple of points that I think when you rub your heads around or you think about, validates the point that, I mean, if you want to move to ICLF, it's cool.
Okay, thank you.
Thank you. So I think we have 2 more questions and then we can move on to the last section. So we have Dala Iniwa, and then there's a question about de-dollarization. So Dala Iniwa, you can kindly unmute yourself and ask your question.
Okay, thank you very much. So Mr. Nana and Mr. Ibrahim, they asked some of my questions, but one that I want to also ask is, so in comparison with other funds over the past year or the past quarter, how has the ICLF been in comparison with other funds? That's my question.
Okay, thank you very much, sir. So I would say that ICLF is one of the best performing in terms of similar funds, or even when you consider other fixed income funds, ICLF is one of the best performing fund. I wouldn't want to mention any name, but I've checked other places where I'm seeing negative returns. I've checked other places where I'm seeing about 8%, 7%, 10%, and probably 15%. But looking at what we are currently doing, just about 20%. Even higher when we look at the last 30 days from what Dora showed, it's about 27%. Depending on how we position and how we try to manage the risk on the fund, maybe seeing a little changes in terms of the returns, but it's fairly stable. And when you compare it to markets, like I've indicated, they're one of the best.
Okay, thank you. All right, so we have, and I think possibly just one more point to Obed's response before I move on to the question in the chat. So the key concept here is safety and liquidity. There are other funds on the market that, you know, targets or invest in other asset classes looking for different objectives. So over here, we are committed to being liquid. It's a very big point for us that when you put in your redemption, the next business day you get your funds, save, you know, a technical glitch, which once or twice has happened. The next business day, we do everything to get you your funds. So that's really key. And that's a metric that we use to measure ourselves as well against the market. All right. So I think there's a question about de-dollarization. So Jedu Eben says, what is de-dollarization and how does it affect the financial markets? I'm not sure if this is something that came up on the call, but is that something that you understand, Obed, to answer?
So Dora, I didn't get, what was the question?
So the question says simply, what is de-dollarization and how does it affect the financial markets? So I'm not sure if there's enough context. If there isn't, I think we will probably get in touch with Jedu Eben. I'll take the contact down and then we will try and respond to that. And then there's another question with no secondary bond market. What are the effects on the T-bills and our funds? I think this has been captured as well. So we are not involved in we're not involved in government bonds. We, as Obed mentioned, the fund made the decision back in August or September of 2022 to dispose of all our bonds at that point in time. And so that has no impact on the fund as we don't hold any, the fact that there's no secondary bond market. Secondly, the treasury bills. So as Obed mentioned at the beginning of the call, as we have gotten a bit more comfortable with government's positioning, especially with the T-bill rates coming down to more sustainable levels, we have made the decision to do some very short T-bills. And you'll see from our fact sheet that we tend to buy 3 months or less. So you'll see that there as well. I think there's a question about investing in international markets. So the liquidity fund is a CD fund where the mandate, as we have registered it with the SEC, is to invest in local assets. So I hope that answers that question. But apart from the fund, IC does offer wealth management. And so if you're interested in investing in markets outside of Ghana, we're happy to speak with you to help you make decisions about what works best for you. And I think the question with regards to de-dollarization is being clarified. Eben is asking about BRICS, Strategic Alliance, and the move to be de-dollarized. I think that is a little outside of the scope of our discussion today. So, yes, okay. So there's a question about automatic crediting of liquidity fund from mobile money from Eric Ufusu. Yes, that is in the works. I don't know if Nana Amo Furia, head of operations, is still on the call. I know he was on at the beginning. Nana, are you still on?
Hi, Dora. Yes, I'm here.
Hey, okay, maybe you can speak about the work that you're doing with regards to mobile money integration.
Sure, great. Thanks, Eric, for the question. Yes, we are looking to put in such a feature in place. What this will allow you is exactly as you phrased it, to set a specific amount and based on that, be able to have your investment credited. The idea is to be able to do this with mobile money once that is ready from the telcos, and also to be able to do this with your debit card as well. So once this feature is ready and goes live, our team will send out the notifications and you should be able to begin using it. Thank you.
Thank you. So it's something we're actively working on. I'm hoping by the end of this quarter, at least we have a more direct mobile money route for one-off investing. And then after that, we should also be able to do automation as well. All right. I think we have two final questions. Oops, my hand. We have two final questions, or actually three final questions, and then we can move on to the fund features. So Che Joseph, if you can kindly unmute yourself and ask.
Good afternoon.
Hi, good afternoon.
Yeah, I think I joined the conversation halfway, but actually I'm not a business person. But I'm interested in investing. That's why I want to invest in ICF. So people were talking business terms, portfolios, and those kind of. It was a bit confusing. I don't know if there is a starter kind of information for we the novice, those who are not business, who don't have business background, so that you also understand. I actually didn't join the conversation from the beginning, so I don't know, probably that might have been discussed already, but I rather want to know. Actually, I go to the IC Wealth page and it looks confusing. I don't know where to start from. I don't know how to do what or how to do this. So that's why I'm pleading if there is some form of education for we the novices. Thank you.
No problem, and thank you so much for your question. So just as a way of introducing the fund to you, the liquidity fund or IC liquidity fund is a mutual fund, meaning that different individuals or companies put money together to invest if we all agree on investing in a similar way. So in this case, we all agree that we are investing to make a return that's better than our bank balances, and we also want to have our money back within a day of asking for it. So those are the two main or the two key concerns that we have, the goals that we are seeking to achieve. In doing so, our fund manager intends to keep our money safe, and so they invest in a number of securities, and that group of securities is what we refer to as a portfolio. The minimum to invest in the liquidity fund is 1 Ghana cedi, and the onboarding process, we've tried to make it simple and online. However, you're welcome to ask for a paper form or to come to our office to fill. I am attaching or adding our web page. I think we will also do well. Our customer team will do well to also give you a call at the end of this meeting so that we can answer specific questions about the fund and help you to make a decision about if it's right for you. Okay. All right. So I think we have Mr. Kwame Osrania-Asiedu. Mr. Kwame Osrania-Asiedu, if you would be able to unmute and ask your question.
Hello, can you hear me, madam?
Yes, right. Thank you. Good afternoon.
Thank you, Madam Host. I'm actually here because one Joseph Carl Bank recommended ICS to me because I have some shares that need to be transferred into an account. So I've taken all the initiatives to get my account open. But as of now, I still can't see any information regarding those shares. And when I sign into the app, I only see the dashboard, which doesn't say anything. So, like my brother Joseph mentioned, some of us are novices here, and I'm somehow thinking I'm on the right, on the road.
I think we lost him, but I got his name, and so we'll contact him. When it comes to issues with regards to shares, unfortunately, we are not the only ones in control, especially if you're moving from another broker. The other broker also has to agree to share your details. And so I'm sure we'll be able to get to the bottom of it once we call him back. Okay, at this point, it's been an hour. I don't want to take more than an hour of people's time. And so I will ask Royce Yama Jr., who's an analyst on the wealth management team, to take us through some features on the platform, after which we'll come back to the questions that are remaining, please. Thank you. So Roy, over to you.
All right, thank you, Dora. Good afternoon, everyone. So I'll be taking us through a few of the key features of the wealth platform. Just a second whilst I share my screen. I hope everyone can see my screen, please. Okay. So the outline for this would be how to download your statement, how you can create a sub-portfolio for your liquidity fund, how you can transfer funds between your main liquidity portfolio and the customary portfolio or your sub-portfolio, that is, how you can set up a direct debit mandate on the platform, and the duration and transfer costs for the different modes of funding your account. So the first, let's jumping right in, the how to download your statement. So when you enter your login credentials, this is the first you'd see your dashboard. From your dashboard, when you look at the overview section, you can see the statement button close to the add funds button. Now, for the downloading your statement, it's pretty simple. You just have to click on the statement button, and then you would have access to your statements. Your statements include your trade live portfolio, as well as your liquidity portfolio. Also a history of the transactions you've made. So if you want to have access to your statement, this is one simple way you can do that. So moving on, creating a sub-portfolio for your IC liquidity fund. Now, just beneath the overview section, if you scroll down a bit, you would see there's a plus sign right here, just beneath one of the portfolios. If you want to have a sub-portfolio for your liquidity fund, you can just click on this plus button, and this form would populate for you. On the right side, that's the form that would populate for you to fill. So you just provide the new name for your portfolio. If you have a target amount you'd want to reach, perhaps you'd want to reach 10,000 Ghana cedis at the end of the year, you can put a target date as well, how much you'd want to deposit. Basically, you are setting a goal to help guide you. Perhaps there's something that you want to invest towards, and this can help you set a goal for that. Okay, so moving on, now transferring funds between the liquidity portfolios. So just like I mentioned, for the sub-portfolio, you can move funds from your main IC liquidity portfolio to the sub-portfolio. You can do that also. So going back to this page, just at the details, I hope you can all see the details button. You can enter your liquidity portfolio by clicking on the details button, and that would bring you to the page on the left. So the page on the left, you see there's a transfer funds button as well. You can just click on that, and on the right-hand side, you see that it pops up for you to populate the transfer form. So for this example, you can see that I'm transferring from my main IC liquidity fund portfolio to a sub-portfolio. Now, I can choose to transfer some funds to the customary portfolio, or I can choose to transfer all. The transfer all has been streamlined with the transfer all button. You can see just above the amount bar. You can click on that to transfer all your funds. It is important to know that I'm only saying you can transfer funds between two IC liquidity portfolios on the platform. You cannot transfer funds from the liquidity portfolio to your trade life portfolio on the platform. However, if you want to do that, you can send us an email at clientservice@ic.africa, and we would assist you. So that is how you can transfer funds between your customary portfolio and your main IC liquidity portfolio. Okay. Now, setting up a direct debit mandate. So this is the instruction that you give us to take an amount of money from your bank account, credit to your IC liquidity fund account at a specific date. And you can do that the same way. You can enter your account the same way you did for the transfer funds. You just click on the details button on the fund, and it brings you to the page on the far left. You click on the Add Direct Debit button, and then the page in the middle. So you select the channel through which you want to fund the account, whether by bank or by debit or credit card. So you select the channel, and then you select the debit amount. When you select the debit amount, the charges and the actual investment amount would populate for you to see. Then you select the frequency. You'll be required to provide a few details, such as your photo. If you select card, you'll be required to provide your card details. You provide the start date at which you want the direct debit to begin. You provide the end date, You also provide a picture of your signature on a white background, and then we can begin the process of setting you up for the direct debit. So that is how you can simply set up a direct debit on the platform. So moving on, these are the charges and durations for the different modes of payment for the liquidity fund. So for mobile money transfers, they are up to 1% charge. There's a credit or after 3 working days when we receive the funds from our service providers. For card transfers, they are up to 1.95%. They are credited after 2 working days, same when we receive the funds from our service providers. It's the same for Express Pay as well, up to 1.95% and credited after 2 working days. For bank transfers, instant bank transfers, they are credited the next working day, but the charges are dependent on what your bank charges for interbank transfers. And so for the direct debit, there's an initial 80 pesos for setup and a subsequent 2 cedi charge for each debit on your account. And it is set up within 14 days. There's a 14 days processing time for the setup. On the withdrawal side, we do not charge any redemption fees, any withdrawal fees. The withdrawals are also processed within 1 business day. I'd also like to mention that there are no front load fees for the funds whatsoever. So the charges that are borne by customers are primarily the transfer costs, and that would be it. Thank you.
Excellent. Thank you so much. So I think we had a couple more questions. So we had Abraham Aqua. So please, if you would like to ask, you can unmute yourself and go ahead.
Okay. Hello. Good afternoon.
Good afternoon, sir. We can hear you.
I would like to find out what is the. I have 2 questions. First, are you implementing the mark-to-market policy from SEC? Because when I open my account, I only see one thing, the actual returns. Or the account, I don't see the mark-to-market one if I'm implementing it. And also, second question is, what's the composition of your portfolio? Since you say you are not doing government bonds again, what's the current composition of your portfolio? The liquidity fund rather.
No problem. So we have been mark to market since the beginning of the fund in April of 2022, which was even before government said we needed to mark to market. The composition of the portfolio at this point in time is mainly reverse repos, which are securitized or secured loans with banks, and only 1 or 2 banks, because only a couple of banks meet our risk criteria. And then we also do T-bills that mature within 90 days. So we are active on the secondary market, and we're able to get T-bills which are very close to maturity, because the point of the fund is to ensure liquidity and safety. Okay. I hope that answers your question.
Yes, because I have another investment with Data Bank, and when I open my days and I see the back-to-market component of the fund and the actual days thing.
Okay, so we didn't have that problem, right? We didn't have that problem because we've been mark to market from the beginning, and so you've always only had a mark to market portfolio to look at. So there's no mark to market and amortize here. There's only one number. So I hope this answers your question. And we'll move on. We'll move on to Mr. Ferdinand Akapuyi. If you are still on, sir, we'll take your question. Okay, if there's no question from Mr. Ferdinand Akapuyi, then we had Kudu Festus, who had a question. Okay. If Mr. Festus is also no longer on the call, then we have Flovie Godwin, who has his hand up. Okay, so if Mr. Kwame Osrani Asiedu can hear me.
Yes, I can hear, madam.
Great.
Yeah, I lost the connection earlier. Yeah.
Right, so I did take note of your issue. What we will say is we'll give you a call, because when you're transferring shares from another broker, the other broker has to send those shares, and unfortunately we cannot control that. But we'll give you a call just to make sure that we're all on the same page.
I would really appreciate that, please.
Okay, great.
All right.
Thank you.
And
Go on.
I just want to add that, should in case you're not reaching me via phone calls, you can send me an email, because I've just requested for a phone number update on my account details, because I've lost. Yeah, thank you very much.
No problem. I think we'll be able to find out you're in our system. Mr. Nana Crampton Bloom, are you asking another question?
Yes, I am, Dora.
Excellent.
Can I go ahead?
Yes, sir. Kindly go ahead.
All right, brilliant. So I've never really been impressed. I think that's the word I need to use, with how quickly my orders are filled with regards to shares purchase. I'm heavy on equities with regards to my trade life portfolio. Now, I just want to try to understand what are some of the aside issues of supply and demand. What are some of the other issues that would ordinarily affect IC Wealth or IC Securities basically being able to fulfill orders as and when they come in?
Sure, I can attempt to answer that, but I'd also be happy to give you a call after this so that I understand the ins and outs of your portfolio. Wouldn't want to discuss the detail here. Essentially, the equities market, as you're aware, has to do with two sides, buyers and sellers.
Yeah.
If one is trying to buy and the sell side is not there, or not to the amount, or to the quantity you're trying to buy, or even at a different price than you want to buy, then we are unable to execute your order as specified. I say as specified because you could amend your order in order to meet the market if you needed to, but that would mean that you would have to go back in and change your order. And so there's a few names on the market that we know are quite liquid, which trade quite easily. However, there are many more that don't. So we will make the time to call you about your portfolio and see what it is you're trying to buy. And if we have to make any changes to orders that you've put in or something, we could definitely advise.
All right.
Thank
you.
Thank you too. So unfortunately, at this point, we will have to end the call. Thank you all so much for joining. We look forward to doing this again in roughly 3 months. We try to do this once a quarter, and this is our second for the year. So we're looking around the August timeframe, July to August timeframe, to meet you all again. So thank you all for joining. We'll be in touch. Thank you.
I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see